Yeah, Bitcoin over $200,000. I think that's our
Goodness.
highest conviction bet. We're at
Wow.
about, yeah, we're at about $113,000 now. But as you and I have discussed, there is this structural mismatch between demand and supply in the Bitcoin market. The Bitcoin market only produces 165,000 new Bitcoin each year. Corporations like MicroStrategy and its peers have already bought close to 300,000 Bitcoin. ETFs have bought somewhere north of 100,000 Bitcoin, and flows are accelerating. There's just more demand than supply, and if that happens, the price has to go up. We've already seen it so far this year, but I think we're accelerating. So Bitcoin 200K would be the cleanest call and probably our most high conviction call.
Bitcoin is set to hit 200,000 this year as unstoppable demand forces prices higher. That's the latest prediction from Matt Hougan, Bitwise CIO. Hougan warns of a deep imbalance in the market, with only around 165,000 new Bitcoin mined each year, while institutions, corporations, and ETFs are buying far more than that. MicroStrategy and similar firms have already secured hundreds of thousands of coins, and ETF inflows continue to accelerate. With buyers far outnumbering available supply, Hougan believes the market is primed for a powerful upward move that could happen far quicker than most people expect. Make sure to stick around until the end of the video, as Matt Hougan lays out the exact factors he believes could push Bitcoin into a vertical breakout and keep it there.
Yeah, we're very optimistic for the rest of the year. Look, you have a trio or maybe four or even five positive tailwinds pushing crypto forward. You mentioned one, which is the sea change in the regulatory environment. That started with the November elections, but it's accelerated throughout this year as the new Congress and the new administration has delivered on its promises. And those include pulling back all the SEC's lawsuits, which were against the crypto industry, allowing for crypto firms to have banks, moving forward on stablecoin and market structure regulation, establishing a US strategic Bitcoin reserve. Regulation was a huge force facing crypto for the previous 4 years, and now it's a massive tailwind. But it's not just that. You look at other things. We're seeing a one-time asymmetric entry of institutional capital into the crypto market. The Bitcoin ETFs were the most successful ETF launch of all time last year, attracting $36 billion in assets. One of our predictions for this year is we're going to exceed that, and we're seeing inflows into Bitcoin ETFs dramatically accelerate. So you have institutions buying, you have a positive regulatory development, and now we have this third major force, which is enormous optimism about stablecoins and tokenization, which is lifting up assets like Ethereum, like Solana, like Chainlink. So if it was primarily a Bitcoin story in H1 and in 2024, it's now a broad crypto story across Bitcoin, Ethereum, Solana, Chainlink, crypto equities, and more. It's just really hard to find a reason to be anything but very bullish. And I think that's why we're seeing prices hit new all-time highs. I think it's why we're seeing strong inflows even during what's usually a slow summer season. And I think the fall is going to be very exciting for crypto indeed.
So, if you had to cut it all down to a single bold call for the rest of the
Mhm.
year, what would you say?
Yeah, Bitcoin over $200,000. I think that's our
Goodness.
highest conviction bet. We're at
Wow.
about, yeah, we're at about $113,000 now. But as you and I have discussed, there is this structural mismatch between demand and supply in the Bitcoin market. The Bitcoin market only produces 165,000 new Bitcoin each year. Corporations like MicroStrategy and its peers have already bought close to 300,000 Bitcoin. ETFs have bought somewhere north of 100,000 Bitcoin, and flows are accelerating. There's just more demand than supply. And if that happens, the price has to go up. We've already seen it so far this year, but I think we're accelerating. So Bitcoin 200K would be the cleanest call and probably our most high conviction call. On the upside, you could see it move past that into the 250 range if you get an extraordinary series of events. I imagine there are tail events that would push it even higher than that. And of course, Bitcoin is hugely volatile. We regularly see 20, 30, 40% pullbacks. So you could see it retrace down to the, $70,000 to $90,000 range. But I don't think that's likely, to be honest. I think we're finally escaping the gravity of $100,000, which has sort of been where Bitcoin has been pinned for the past 6 months. And I think as we do, we'll start to move up toward that $200,000 range. But of course, there are tail events on either side. We're really watching three things. So first, you have the stablecoin bill. The stablecoin bill would put stablecoins, which are US dollars that move over the blockchain-based rails, on a firm regulatory footing. If we get passage of that bill, which has already gone through the Senate, where it achieved, I think, 68 votes, one of the most popular bills in Congress this year. That's an important fact. Crypto is actually a bipartisan issue with support from Democrats and Republicans. It got 68 votes in the Senate. It's now with the House, and then it will be signed into law. That will bring a huge amount of institutional interest into the space. So we're watching that progress. The second is the Market Structure Act, which would define more clearly whether the CFTC or the SEC governs crypto and what are the rules of the road. Having that in place will dramatically reduce the risk of future blowups in the crypto market, which have been a big headwind for crypto historically. The crypto industry has been asking for regulation because good actors know that they will thrive under a reasonable regulatory environment, whereas in the previous environment with effectively no clear regulations, you had things like FTX bubble up. So I'm optimistic that we'll get that through. And then from an investor side or an investment side, the SEC is looking to develop something like generic listing standards that would allow us to launch lots of different crypto asset ETPs and index-based ETPs more easily than we have in the past. And that just means that hopefully by the end of the year, crypto will have broad engagement from Wall Street. It will have a firmer regulatory footing with fewer blowups, and investors will have more choice in how to express their views on crypto. That's a pretty great combo, and I have a high degree of confidence that all three of those things are likely to happen from a policy perspective by the end of the year. What you're seeing in the market is what you would expect, which is the fast actors moved first. The first people from an institutional setting to move into crypto were hedge funds and family offices because they can make a decision like that. And today, 9 of the 10 largest hedge funds in the US own Bitcoin, and many families do too. The next was RIAs because they're independent financial advisors. Then after that, wirehouse brokers, and we've seen approvals at major national account platforms. And eventually we'll get to pensions and endowments. They move on their own scale and their own time frame. I think they're moving very fast. It's just crypto is very impatient. So they will get there. This will be common. We've already seen a few do it. We're going to see hundreds do it in the next 5 years, and that's a lot of money to come into the space. The analogy of speedboats versus oil tankers is the right one. The oil tankers are the pension funds, and they're turning toward Bitcoin. They really are in large form, in large numbers. And when they do, they're going to buy and hold for a very, very long time with a lot of capital. The other thing I would add to people, we're still early in this process. Even if we go up that spectrum to say the RIA market, it's still the case the majority of RIAs have zero exposure. And those that do own maybe 1 or 2%. You've been out with some provocative papers about how much people might consider owning. But I think for sure you can know we're in like inning 1 of this institutional adoption or inning 2. There's still a long way to go, and that's exciting to me as an investor. We still have some of the forces that contributed to the 4-year cycle, whether that's the halving or interest rate cycles or economic growth cycles or the buildup of leverage in the crypto system. Those still exist, but I think they'll get overwhelmed by this wave of institutional capital. We think we're not in a permanent super cycle for Bitcoin, and it will still be volatile, but we're optimistic that next year, which in the 4-year cycle would be a down year, is actually going to be quite a good year as these institutions move into this space. Look, there's still going to be volatility in the market, Rick. There'll still be pullbacks, but we think this wave of institutional capital is the biggest force to hit Bitcoin maybe since it started, and therefore I think it's going to dictate the market trends for a number of years.
Matt Hougan believes crypto is in one of the best positions it has ever been. Rules are now clearer. Lawsuits from regulators have been pulled back, and banks can work with crypto firms. Bitcoin ETFs have broken records and are pulling in more money each week, while demand from big companies and funds is much higher than the amount of new Bitcoin being created. Hougan believes this supply shortage, combined with growing interest in stablecoins and tokenization, will keep pushing prices higher. He sees big gains not just for Bitcoin, but for Ethereum, Solana, and other crypto assets this year. Now let's hear more of what Matt Hougan has to say.
What's the impact long-term on Bitcoin's volatility? Volatility has always been an argument for people to dislike crypto, but is volatility changing? Is it becoming less volatile?
It is. It's declining over time. It's about half as volatile as when Bitcoin started, which makes sense from an empirical perspective. Bitcoin is significantly less risky today than it was 15 years ago. I'd argue it's less risky than it was 15 months ago when we had a harsh regulatory environment. So when an asset has lower risk, you would expect it to have lower volatility. An analogy I would make, and I was looking at this data earlier today, is to gold after we went off the gold standard. If you look at gold's volatility from 1971 to today, it went on a massive downward slope. It was extremely volatile in the 70s as the market was wrestling with what gold was and we were dealing with high inflation. And then it really declined into the late 90s before it hit its steady state run. I think Bitcoin is doing something similar. As it matures as an asset, as we squeeze the risk out of it, the volatility is coming down. It's less volatile than some Mag 7 stocks now. It's still a volatile asset, but it's not the Bitcoin of 2018, and it's not the Bitcoin of 2022. This is the Bitcoin of the ETF and institutional era, and that means volatility is going to be compressed a bit versus historical norms. Look, we have a more diverse investor base. In the early days of Bitcoin, it was all sort of tech enthusiasts and retail investors, which can move in very volatile fashion. As you mentioned, now there are these different types of investors. And because the asset has persisted for so long, there's reason to think it will persist in the future, which means you will have those value buyers. So yeah, I think we're probably said goodbye to 70% drawdowns. And we'll still see 20 to 40% drawdowns for sure. You can see those in 30-year bonds in the right circumstance. So we
see
it
in the stock market all the time.
100%. So we haven't gotten rid of that, but I do think we've shrunk that downside risk pretty significantly.
All right. So the big question that is for everybody new to this, and still the majority are new to this. How do you proceed? Do you buy Bitcoin? Do you buy Ethereum? Do you go thematic? Do you buy an index? What's the best way for people new to this?
Yeah, I'm one of those weird things in the world. I'm a John Bogle crypto investor, which means I want to own the market as my starting point. So if I am naive to crypto, if I just want to make a bet that crypto is more important in the future than it is today, I want to own a market cap weighted index of crypto assets, Bitcoin, Ethereum, Solana, etc. And then I want to own a diversified basket of crypto companies that are using and building the crypto ecosystem. So firms like Coinbase and Circle, because you don't know exactly which asset will win. If you ask 1,000 crypto analysts whether Ethereum is better than Solana, is better than Aptos, is better than Avalanche, is better than Sui, you'll get 1,000 different opinions. It's easier to just make a bet that, programmable blockchains will be important. I want to own the whole set, right? It's like don't buy Ask Jeeves, buy the internet. And then at the same time, you want to supplement that with companies, because if you look at the growth of stable coins, a lot of the value there is going to companies like Circle and Coinbase. They're building stable coins, right? So if you start from that perspective of owning the market, an index of crypto equities, an index of crypto assets, then you can over and underweight things to your heart's content. Maybe you overweight Bitcoin because you're worried about fiat debasement. Maybe you overweight ETH because you think it's turned around its narrative, as I do, and think it'll have a very good second half of the year. But that starting point should be index crypto assets, index crypto equities.
Bitcoin's volatility is steadily falling as the market matures. It's now about half as volatile as it was in the early days, and he compares its path to gold after the US left the gold standard, when volatility dropped sharply over time. Hougan believes large 70% crashes are likely over. with institutional investors stepping in as buyers during smaller declines. That deeper long-term capital base reduces extreme downside risk while keeping room for normal pullbacks. In his view, Bitcoin has entered the ETF and institutional era, where its price movements are more controlled and its long-term stability continues to grow. What about you? Is Bitcoin entering the most powerful and sustained bull market in its history? If you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.